Welcome back to the channel, everyone. It is good to see you all again, and I hope you're all doing okay. Today, we're going to be talking about inheritance tax. So, it has become more and more clear to me that most people just don't really understand inheritance tax, despite having very strong opinions of it. Don't get me wrong, I think the inherent concept of the tax is wrong. People pay taxes on their estates their whole lives, just for the government to want to tax you all over again on death. I've never really agreed with it, but listen to me very clearly when I say it, and let me make this quite plain. Most people don't pay inheritance tax. They don't. For example, only 5% of estates actually pay inheritance tax on average, meaning that 95% of estates don't pay anything. Guys, this is primarily a tax that only affects the most affluent households in society, but with luck, you hopefully may well become successful and become one of those affluent households at some point in your lives, at which point you will need to concern yourselves with this tax. Also, property prices are rising fast and people's homes are worth a lot more than they used to be. That means more and more homeowners now own higher value estates. So that is why it's important that you listen closely to this short video today, as I'm going to be busting some of the most common myths about inheritance tax so that I can show you all how much tax you are really going to pay and help you plan your estates more wisely. I'm going to do all that in just the next 9 minutes, so let's get straight into it. So, as I said, inheritance tax primarily affects those with estates valued well over the normal household. But it seems there is a lot of misunderstandings about who gets hit hardest by this tax. So in the UK, our government allows for a number of exceptions and thresholds and allowances that mean most people will never pay inheritance tax. And even if you do end up in that bracket, there are plenty of legal strategies to reduce your taxable estate. Now, those strategies are extensive, however, and will be covered in my next video. So next week, 7 days from today, I will be releasing my inheritance tax masterclass video on exactly how to exploit all of the available reliefs and exemptions. So together we can massively reduce your inheritance tax bills and keep your hard-earned wealth in your family and away from the tax man. For now though, here is the 5 essential need to knows beforehand. Guys, this is really important. Rule number 1, spousal exemption is king. What do I mean by that? Well, basically, anything you leave to your married or civil partner is completely exempt from inheritance tax, guys. That's it, simple as that. Now, this benefit only applies if you are legally married, unfortunately, guys, or in a recognized civil partnership. So if you're just cohabiting with someone but not married, you will not get the benefit of this exemption, okay? You have been warned. Now, this is an extremely powerful tool for estate planning. Now, I'm not telling you to get married, guys, but one of the biggest financial advantages of marriage is the ability to transfer your wealth to your surviving partner without incurring any tax when you die. Now, that leads us on to our second need to know, which is your tax allowance. This is really important, guys. So today, the current nil rate band is set at £325,000 per person. Now, what is a nil rate band? For anyone who doesn't know, it is a tax-free allowance. Currently set at £325,000 in the UK, allowing individuals to pass on their assets to their descendants or their beneficiaries without incurring inheritance tax. Essentially, the nil rate band, the NRB, defines the threshold below which your estate is not taxed on death. So if your total estate value on death is below this amount, then you won't pay any inheritance tax on it. Now, many of you will probably already be aware of this. So for the majority of people in the UK who've built up a modest estate in their lives, this threshold is the reason why you're probably not going to pay any inheritance tax when your estate passes on. But let's say, for example, your estate will be worth over £325,000 when you die, which is many people. Many of you are probably thinking, well, will I then need to pay inheritance tax on my estate? Well, no, not yet. That leads me to my next very important tip, which is the nil rate band boost, guys. Now, here's where things get really interesting. So that £325,000 nil rate band I mentioned can actually be boosted significantly. And I'll explain how. So if you leave your main residence to your children or your direct descendants, then that £325,000 threshold can be boosted up to £500,000, £500,000. I repeat, if you're leaving your main home, your main family home, to your children, which is the case with most families, then that £325,000 nil rate band can be boosted up to £500,000. So in other words, any primary homes passing down worth under £500,000 will not be subject to any inheritance tax. And with the rising property prices, That is very good news for people at the moment. Many people's family homes out there are worth more than £325,000. So this is very welcome news. This boost is called the residence nil rate ban, but please note, however, it only applies to estates under £2 million in value. If the value of your family home is above that, above 2 million, then the benefit does start to taper off. So this is a vital strategy for many families planning their estates. Leaving your main family home in your estate can attract massive tax reliefs, guys. Maybe now you are starting to understand that original statistic I mentioned of why only 5% of estates are actually subject to inheritance tax, right? Quick note before we continue, guys, I will never ever ask you to subscribe to my channel, just that you give me a chance to earn that from you with the content I produce. So if at the end of this video you feel like you have learnt or liked or taken anything of value from it, then please feel free to do so. Now then, the final two important tips are genuinely fantastic tips to know, guys. The first of these little secrets is called the allowance transferring rule. Now, one of the clever mechanisms in our inheritance tax system is the ability for you to transfer unused allowances, unused nil rate bans, as I mentioned before, to your surviving spouse. So for example, when you die, if you leave everything to your spouse, they will also inherit any unused portion of your nil rate band, of your £325,000 band, effectively doubling their own nil rate bands, right? Let me illustrate this for you very simply so I know you know exactly what I am saying. If you and your partner both have a tax-free allowance of, let's say, £500,000, like I said, your residence nil rate band. If one spouse dies without using that allowance, your surviving spouse will also inherit your £500,000 resident nil rate band allowance. And then yours and your spouse's combined estate can then be passed on to your descendants tax-free up to £1 million, which I think then covers the vast majority of UK households, doesn't it? This is a major advantage and a strong reason why, from a tax perspective, again, getting married really does have its perks. So this is again why you are starting to see why only a small percentage of estates actually end up getting taxed, guys. And finally, if all that is still not enough for you, if you're still worried about inheritance tax, if all those allowances aren't quite enough for you, perhaps you have a very wealthy estate, well then there is one final gift basket that I have for you guys, and that is the 7-year gifting rule. Now I'll explain this very simply. If you give away your money or your assets from your estate and you live for at least 7 years after making those gifts become exempt from your inheritance tax bill. They do not any longer form part of your estate. This rule exists to ensure that people aren't just gifting away all their assets immediately before they know they are approaching end of life. People would certainly exploit that if that was the case. So the longer you survive after a gift from your estate, the less tax you pay on it on death. And like I said, if you survive 7 full years after making that gift, then that gift is no longer part of your estate for tax purposes and won't incur any inheritance tax. All right, so what does that tell you, guys? With wealthy estates, you can and should begin to start gifting that estate slowly to your descendants or your beneficiaries as early as possible in order to avoid the tax man. But guys, this is very important. Only certain gifts apply to this rule, and only certain beneficiaries or recipients too, and I will cover this more in the video I discuss next week in 7 days time when we discuss the 7 strategies to massively reduce your inheritance tax bill. I'll drop a link to that video in the description when it's ready. And there you have it, guys. Now I've officially taught you the absolute need to knows about inheritance tax, and you can start to understand in your own mind why people's misconceptions about inheritance tax actually cause them to panic when they may not necessarily need to. But what about the tax? What about when you have to pay tax? Listen closely and pay attention to this next point. If after all of the reliefs and all of the allowances, then there are still assets left in your estate, then yes, you may be liable to pay the inheritance tax. And that inheritance tax is currently at 40%. However, please do not fear. You do not have to pay that 40% on your entire estate. It is only on the portion of your estate that exceeds your nil rate band allowance and your other allowances. Only the portion that spills over the threshold, not all of it. This is a massive myth that I need to clarify. So please, guys, don't worry about panicking to rearrange your estate quickly so that it fits under the threshold. It doesn't work that way. So by now, guys, you should all understand basics of the tax and how it applies to your estate. This now allows us to do what we've been waiting for, which is to debunk the biggest myths surrounding the tax together. Now, the last myth is very important here, guys, so I do encourage you not to skip it. So then, myth 1, everyone gets hit with inheritance tax. Now we know, and I fully explained how this is not the case except for those only with the largest and most affluent estates. This is because the government do give you massive reliefs and allowances and even gifts to take advantage of. Myth number 2, inheritance tax at 40% will just devour my estate. No. Again, for those cases where inheritance tax are applicable, many people assume that it will strip their estate away, but no. Remember, as I said before, the rate is only 40% on the amount that exceeds, that spills over your tax-free threshold, not all of it. Myth number 3 then, I can't plan for my inheritance tax until I'm rich or I'm elderly. This is simply not true. Effective estate planning happens early, like making gifts during your lifetime and using the spousal transfer rules that I mentioned. It is essential for almost everyone, not just the super wealthy or those close to death. And it's not a one-time event either, guys. Changes in personal circumstances necessitate your attention. Changes in tax laws, changes in financial landscapes may also necessitate adjustments to your inheritance tax strategies. And myth 4 concerns that 7-year gifting rule that I mentioned. And this one is really important, guys, as I've seen several people get this wrong in my life. And that myth is that gifting my assets away will solve everything. No, it does not solve everything. It's not a one-size-fits-all solution. While gifting your assets can be a legitimate strategy for reducing tax, yes, it will not solve everything. The timing and nature of those gifts is really important, as well as your relationship between the giver and the receiver. The government is very strict on this, and there are rules. Oh, and finally, guys, one other myth which I hear all the time: the government will eventually abolish inheritance tax. Let me be very honest with you guys. Every single budget cycle there are rumours about inheritance tax being reduced or even abolished. It's often dangled at the forefront of many political campaigns in order to secure popularity. This has been the case for as long as I can remember, but let me make this very plain. The tax is not going anywhere. It's a very valuable tax for the government to tax people's wealth. Now, as I've said, guys, the purpose of this video is to dispel myths and to explain to people how inheritance tax actually works, and I hope by now I have done that. But many of you will want to know the steps now and the tips and the tricks to minimize your inheritance tax over time. Many of you are going to build large estates and very valuable estates in your lives, and those strategies to minimize your tax exposure will be very important. So keep an eye out for that video, like I said, coming next week. Subscribe and get notified for it. Get down in the comments and let me know what your thoughts are on inheritance tax and your experiences of it. Let's get a discussion going down in the comments. And guys, let me make clear, this is not qualified legal or tax advice. This is purely educational content. So please speak to a tax advisor before making any important decisions about your estate. That said, thanks for listening, and I'll see you in the next video.